Ethereum is let's call it roughly $250 billion of capital. And then ETH2s are roughly $50 to $60 billion. You look at Bitcoin, it's actually more than double the size in terms of capital, like north of $500 billion in capital. But the Bitcoin L2s are not even 2 billion, right? And I think Stacks is probably like 70 or 80%. But in general, like just a small L2 market. But if you build a successful Bitcoin protocol today, and the amount of capital that can flow through it's like night and day. Right?
Hey everyone, welcome to the Edge Podcast. I'm DeFi Dad from Fourth Revolution Capital, and I'm joined here by my co-host from 4RC Nomadic. Today we're talking with Muneeb Ali, the co-creator of Stacks and the CEO of Trust Machines. Stacks can be thought of as a Bitcoin layer for smart contracts to build decentralized applications. As of this recording, Bitcoin has the largest crypto market cap in the world at 503 million. By now, Bitcoin has been established as a household brand across the globe. Even if you're not an investor in Bitcoin, the name is recognized worldwide. So when you consider the large amount of value on the Bitcoin network that might be unlocked and be used ultimately as collateral and trading liquidity in DeFi apps on Stacks, it prompts most of us to want to dig in further. I remember in 2019-2020 when we were tracking the total amount of tokenized Bitcoin in DeFi on Ethereum. It was a major catalyst for more capital and more users to enter DeFi on Ethereum. Today we'll talk with Muneeb about the state of Stacks as a smart contract layer for building decentralized applications, and if they might similarly benefit from that massive amount of liquidity on Bitcoin being unlocked to use in Stacks apps. But before we get started, just a quick word from our sponsors who make the Edge podcast possible.
Mantle, a DAO-governed ecosystem of decentralized and token-governed technologies powered by Mantle's native token, MNT. Its flagship product, Mantle Network, is a high-performance Ethereum Layer 2 network built with modular architecture. At Mantle, we're passionate about supporting builders and created a milestone-based grants program for promising Web3 projects. Calling for ambitious Web3 entrepreneurs. Visit mantle.xyz/grants and apply for it today.
Whether you're a trader, farmer, analyst, or newbie, you can trade smart with KyberSwap, the OG decentralized exchange and aggregator on 13 chains. Swap at the best rates, farm with real yields, set limit orders, use their proprietary trading and AI tools with the best UX in DeFi, securely and permissionlessly. Get better rates, better opportunities, better alpha, and a better trading experience. Trade smart now at kyberswap.com. The future of Web3 is bright, but crypto startups, DAOs, and on-chain organizations can't scale without tooling to power world-class financial and payment operations. Introducing Utopia, your all-in-one platform to create, execute, and understand your Gnosis-safe transactions. Execute payroll 10x faster through automated payment plans. Coordinate reimbursements and accounts payable through payment requests. Execute multi-sig transactions faster with your global team through signing links. View, label, and categorize all of your safe transactions in one place. Start managing your on-chain payments today by going to utopialabs.com. To get started with gasless payments, message Utopia's co-founder on Twitter at 0xkaito.
It all started so simply with CryptoKitties and Maker on Ethereum, but quickly became complex with more applications and many chains. Today, everyone agrees UX issues are the biggest blocker standing in the way of crypto adoption. Introducing Avocado. Multi-chain UX redesigned from the ground up. The first wallet to abstract networks, accounts, and gas. One gas tank to pay transaction fees on all chains. In USDC. And native access to dApps' powerful, custom DeFi strategies. Avocado, one wallet to rule all chains.
EtherFi is a fundamentally new kind of staking protocol for Ethereum. EtherFi is the only protocol that allows stakers to retain control of their keys while delegating staking, and allows others to build services on top of delegated staking infrastructure. What makes EtherFi different? EtherFi is the only staking protocol where stakers retain control of their keys, which means that even if the protocol gets attacked, or if the node operators get in trouble, you can always get your Ether back. EtherFi introduces a new fun way to stake called EtherFan, where you get rewarded the longer you stake. When you stake your Ether with EtherFi, you mint a provably rare NFT that you can use to earn membership points, and get boosted staking rewards. Revenue from these services is shared between stakers and operators, which further boosts your staking rewards and node operator revenues. To learn more, go to ether.fi and ether.fan. All right, so just a bit of background about Muneeb before we introduce him. Muneeb Ali co-founded Trust Machines in late 2021, and earlier he co-created the Stacks layer, a Bitcoin layer for smart contracts that has emerged as the leading Bitcoin L2. BT dubs, today we will also discuss what is an L2 and why Stacks may or may not be referred to as an L2 depending on who you talk with. He received his PhD in computer science from Princeton University, where he still gives guest lectures on Bitcoin and the crypto space. Muneeb started working in the Bitcoin industry in 2013 and has built several protocols and apps on Bitcoin. He is one of the main characters in George Gilder's book, Life After Google, and interestingly enough, he served as a technical advisor to one of the funniest shows I know, HBO's Silicon Valley. So on that note, let's go ahead and introduce him. Muneeb, welcome to the Edge podcast. How are you doing?
I'm great. Thanks so much for having me.
Yeah, thanks for joining us. You are a very busy person. I don't know how you sit across all the different protocols, developers and teams that are building there on Stacks, but we're really privileged to get to talk to you. And we're hoping that this, again, will serve as sort of like a starter guide for those who are maybe already into DeFi and Web3 applications to start to learn more about Stacks and all of the different decentralized applications that are being built there. But why don't we kick off with just a little bit more about your background? I gave a brief bio there. Do you want to share a little more about just how exactly you got into crypto, what sort of drew you in? And then, of course, let's talk about what prompted you to start building Stacks.
Yeah, so I think I'm an engineer at heart. I'm a computer scientist by training. So my interest has always been internet, open protocols, large-scale distributed systems. I did my PhD at Princeton in distributed systems, and that was kind of like a default path to go towards, like either go into academia, become a professor somewhere, or go work at a large, a Google or a Facebook type company building their back-end large-scale distributed systems. But my passion I found during grad school was not just doing R&D for the sake of doing R&D, but actually commercializing systems. And I always enjoy being on the cutting edge of things more than more sort of like stable and established things. So right before graduating, 2013 is when I was supposed to graduate. Sort of like took a leave from grad school and just really build startups and try to try them out and see there it goes. It's me and my co-founder Ryan Shea, who I also met at Princeton. We were sort of like we're trying out different ideas. Right? Really, the team was there first, and we were building it. It was East Village. We were in a co-working space, and this is the time that Bitcoin was kind of like getting a little bit more popular. We were really interested in it. We would talk about it a lot, but we were actually hacking other stuff. And funny enough, that everyone else in the co-working space thought that we are a Bitcoin startup, and they would be surprised when we would find out that no, we just talk about Bitcoin because we are very excited about it. And if people sort of like started saying that you guys are so passionate about this Bitcoin thing, why don't you actually like try to build something there? And I think it helped nudge us more towards that direction. And we sort of like started taking a deeper look at like how the peer-to-peer network or the chain is working, what can be built on top, and we both applied software parameters. So we are kind of like just messing around with things. And one of the interesting things that started coming up was, even though payments is the main use case of the Bitcoin chain, there are other ways to embed other sorts of data there. You can sort of like build other protocols on top, and you can sort of like almost imagine that this could be a backbone of a very decentralized internet, right? Like that is truly decentralized. Like this is now like years later, almost like 10 years later, we're seeing the same thing with Ordinals when people are putting these NFT pictures directly on chain. You get the feeling that, hey, this image is now indestructible, right? So now that it's a very sort of like a rock solid decentralized system. And that's what we started packing on. We built like a DNS-like system, like DNS is a domain name system. When someone types in CNN.com, there is basically a bunch of root servers on the internet that will resolve what the IP address is that thing is. And our initial ideas were what if the Bitcoin blockchain is actually resolving. But I think these are the type of things that later led to ENS, the Ethereum name system, BNS, the Bitcoin name system. Some of the early ideas actually should come from some of the works. That's how we got started, and then Bitcoin is a rabbit hole, right? Like it just keeps getting deeper and deeper. This was pre-Ethereum days, and I think we could almost see the writing on the wall that something like Ethereum or these more advanced contract systems will emerge, and they were sort of like early thoughts of these things.
Funny enough, years ago, this was like 2009 through 2011, I was in a chemistry PhD, and I ended up leaving it early and doing other things. But man, I would have given anything at the time for someone to have tapped me on the shoulder and said, hey, man, you should learn about this Bitcoin thing. And funny enough, when I was there, I'm pretty sure Will Warren, who's the co-founder of the 0x protocol, we were both there at UC San Diego. I'm pretty sure back then. And I have thought so many times over, like, why didn't I just run into this one person? I could have been so much earlier than, for me, 2017 was when I got into crypto. So it took me quite a bit of time. Can you recall, like, when you were first starting to build stacks, I'd like to kind of just double click on the story you would tell folks about the opportunity if you could enable building decentralized applications secured by the Bitcoin network. What is that story to tell? Like, what exactly, I guess, do you even mean by it being more decentralized?
Yeah, so I think the way I think about it, when people sort of call it the Bitcoin thesis, is if something bad was to happen to Bitcoin, it is going to wipe out the rest of the industry as well. I don't think we're in a place where, the Bitcoin price tanks and everything else is doing fine. No, everything else is actually going to go down even more rapidly. So we are still in a position where Bitcoin is the most battle-tested number one chain, and it is also I think in many ways, like, everything is an experiment. We are in the early days right now, but Bitcoin is the most mature experiment, right? It also doesn't change that much, and which allows other ecosystems to be even more experimental. So Ethereum is definitely a lot more experimental than Bitcoin. And then if you're an even smaller chain, like, you can be even more experimental than Ethereum. And I think that's great. That's actually good for decentralization, that there are places that won't go and run crazy experiments without having that much at stake. And so if something goes wrong with Bitcoin, I don't think the entire industry is much more at stake than anything else. So if you take that lens, what that means is if you're building something on Bitcoin, it has the potential to last longer. Right, it's designed to be more durable. It's designed to be more decentralized. And then on the decentralization side, one interesting thing is that there are certain applications where decentralization matters a lot, right? And Bitcoin's sort of like, I think money is one application. Like, you don't want to be in a position where the money supply can be changed for whatever reason. And we know that there are maybe interesting, innovative things willing to adapt and introduce new sorts of experiments around burning and changing supply. But it is a change, right? Like, it makes it a different type of an asset, where Bitcoin is becoming an asset where the value prop, this thing is just never going to change. It's incredibly neutral, and it's going to stay the same like 10 years from now, 20 years from now. And if something is very, very decentralized, similar to, I think, if you're thinking about, we were talking about domain name systems earlier. One of the things that comes up is who can censor a domain name, and if it's on Bitcoin, the answer is nobody, and it's going to be very, very hard to censor anything that's built in Bitcoin. And the decentralization plays a role there. Like, if you run a thought experiment, like, how many entities do you need to go and shut down to materially kind of like shut down a network? So, for example, I don't want to pick on Solana, but if Solana Labs shuts down tomorrow, I think the state of the Solana blockchain would be much more questionable than consensus shuts down tomorrow. I think Ethereum will be just fine. right? And similarly in Bitcoin, it wouldn't even do a blip. No matter which company shuts down, like Bitcoin, it wouldn't even be a blip. Like it just doesn't matter. Like it gets so decentralized that it just doesn't matter. So I think that's why Bitcoin is what it is, because it is the most grassroots technology. It is sort of like the most decentralized in all these dimensions, where it is just not dependent on any single geographic location, any single entity, any big powerful figures. Those Satoshi is long gone. There are like, these even big powerful figures that can have an influence. And I think all of that helps the case for Bitcoin.
I think this is something too that a lot of people take for granted when they're really new to crypto. The predictability of the Bitcoin network at this point, that's a part of what gives it so much value. Like that's something that you just need to live through one of the, thousands of different crypto startups to like really understand this is a very special sort of thing. This is why Bitcoin is a commodity. It's so clearly a digital commodity, and it's not something to take for granted. We definitely want to talk to you more about stacks today, but I think before we do, I do want to just give a little more context to the recent history of Bitcoin. So, we're in 2023. The Bitcoin network has been up for well over 10 years at this point. And so some of what's happened over the last year is kind of what I want to highlight here. And so I was looking up fees that are being paid daily by users to transact on the Bitcoin network. And so if we look back like at the last 6 to 12 months, some context to give folks here if you're listening to this in the future. And also we're going to use fees here as like a proxy for measuring demand for block space, even though it's not a perfect way to measure that. And so the Bitcoin network had, let's call it like a low of as little as $118,000 in daily transaction fees on October 9th, 2022. But it had a high of, and it's crazy, it's so much more, 17 million in fees were paid on May 8th, 2022. Now, fast forward to, I'm sorry, by the way, that was May 8th, 2023. And so if you fast forward then to today, and we've lived through kind of like a market drawdown and a little bit less economic activity happening across all the chains in the last few weeks, we're closer to still about 1 million in daily transaction fees. Comparing that just to Ethereum, again, to give a little more context, Ethereum had a high of 33 million, so maybe double of what was on Bitcoin on May 5th, 2023. And then going back to October 2022, we had a low of about 3 million in daily fees on Ethereum. So my point in all of this is there's been a very dramatic rise in 2023 in network activity. There's been an acceleration in the amount of fees that are being paid on the Bitcoin network. So can you start to highlight just what are some of the reasons for that? What are some of the big stories and some of the major players in that story in 2023?
Yeah, so I think let me connect that trend with some of the work that we've done. So 2017 is, when the site file raised like initial capital and started building this Bitcoin layer. And the pieces at that time, in many ways, was very similar to Lightning. Lightning is a Bitcoin layer, Bitcoin L2, focused on payments. That the main chain is not where you're going to buy your coffee. Like, you can't do so many transactions on the main chain, and it's going to happen in layers. And that is something that there's like sort of like a multiple bets happening. One thing is that scalability is going to happen in layers, which was not an obvious idea at that time. Like on the Ethereum side, people are looking at sharding and other types of L1 solutions. A bunch of people are trying to build these separate, faster L1s. And recently, if you notice, at least the narrative that is emerging in 2023 is that there's a ton of focus on Ethereum layers and Ethereum L2s. That a lot of scalability is actually going to come from layers. And I do think that we were early in that regard, that we were taking the bet that it's going to be layers, because on Bitcoin, it's actually easier to see that it's going to be the L2s that are going to not only bring scalability, but they're going to bring a new functionality as well. Like, because you can't do much in any Bitcoin L1. But the time between like 2018, 19, 20, sort of like a dark period in between, over there, everyone in the industry is all saying that, hey, why are you even building on Bitcoin? Like, just go to Ethereum, just go somewhere else. It's so hard to build on Bitcoin, and what's the reason to do it? And I think we sort of like stuck around. Maybe we're maybe a couple of years too early for it. But 2023 is the year where I think Ordinals kind of like just lit a spark. They hit some sort of a nerve with the users, and instantly people see value that an NFT that is embedded directly in the Bitcoin chain is just much more valuable than if it's a pointer on Ethereum or on ours, because now it's indestructible, it's there forever. And I think it just drove in builders and drove in a bunch of users, and people started realizing that you can, even though it's much harder to build on Bitcoin, but you can build pretty interesting things. You can do trading directly on L1, and that's where a bunch of the fees started coming, right? So, which I think Bitcoin, my view is the Bitcoin block space was underutilized and underpriced over the last 4 or 5 years, and rightly so. A bunch of people in Ethereum were pointing out that, look, Bitcoin fees are so low, Coinbase rewards are going down. How is Bitcoin going to pay for security 10 years from now when the Coinbase almost go down to next to values? And I think they were right. That's valid criticism. But what happened in 2023 with the spike in fees, I think it's no longer theoretical to say that Bitcoin will be fine. There's data to basically show there's real demand. Same with building on Bitcoin. I think it's no longer like, it's a very small group of diehard people and like, hey, we're going to build on Bitcoin no matter what. Now it's actually making more economic sense for folks who are actually building somewhere else to come here. Like one thing that I point out at times is that Ethereum is let's call it roughly $250 billion of capital. And then ETH L2s are roughly $50 to $60 billion. And then ETH capital, it's actually quite competitive, right? Like, because you can do a lot of things with your ETH. Well, you can earn staking rewards straight from the protocol. You can deploy it in different things, and roughly 33% or so is actively deployed. But there's tons of competition, tons of well-funded startups, tons of builders. There's a ton of demand. And you look at Bitcoin, it's actually more than double the size in terms of capital, like north of $500 billion in capital. But the Bitcoin L2s are not even 2 billion, right? And I think Stacks is probably like 70 or 80%. Right? But in general, like just a small L2 market. But the ratio of like what's happening, like if you build a successful Bitcoin protocol today and the amount of capital that can flow to it, it's like night and day, right? Like it's blue ocean on one side and a pretty competitive world on the other side. So, and that thing actually started resonating with startups. Now we know, for example, Magic Eden, there was a big player on Solana, and then on Ethereum, we're actually focusing a lot on Bitcoin now, because it makes like a rational sense for these parties to come and build in a market where they can dominate, where there's a lot of capital available, there's lots of users. So I think that Bitcoin thesis is no longer theoretical. Now itself like playing out now. And I think that is very, very exciting for us, because I do think in many ways it's just the beginning. Bitcoin L2s right now are nowhere close to being as mature as the basic kind of like UX problems, infrastructure problems, speed and reliability problems. But these are enduring challenges, and I think they can be overcome. I think the fundamentals are extremely strong. Like Bitcoin is not going anywhere. Bitcoin is the biggest brand. Bitcoin is the thing that most people know about.
Muneeb, I love the napkin math that you just ran through there quickly with just kind of the amount of capital in ETH and that relationship between the ETH L2s, and then kind of like looking at that in comparison with Bitcoin and the Bitcoin L2s. I think if people really pay attention to that, they realize just kind of how much blue ocean there is in this space, and like uncharted territory, and so much to discover and opportunity, really. I also think that with Ordinals, there was almost like a collective aha moment that happened, and light bulbs just went off with tons of people, that even myself included, that, just still thought of Bitcoin as this certain thing, and it was in its own box, and it's kind of exploded out of that box pretty like meteorically. And on that, like with this emergence of ordinals, like how do you see it right now? Do you see ordinals as something that is going to be a foundational kind of like new primitive that people will build upon and there's real staying power there? Or is this a passing fad? Would just love your opinion on ordinals itself.
No, I think ordinals, the ordinal theory is like very, very fascinating. And it's a way of basically inscribing more data on the chain. But I do think the protocol is like simple enough and generic enough that people are already using it for other purposes. I'll give you some examples. That earlier domain name system stuff that I mentioned. So people are building very simple domain name systems using ordinals. It's just data that they're embedding on the Bitcoin chain. There's actually a new subscribing service. Again, very simple JSON protocol that's saying if you want to permanently archive something, Bitcoin will be the ledger record for humanity. Here's something that I've just archived in Bitcoin. Good luck change. Like it's never going to change. So like people are inscribing news. People are actually coming up with token standards. So there's a standard called BRC20, named after ERC20, but with some interesting tweaks. And that's actually based on the Oracle inscription method, right? So people are already expanding that stuff out. So I would say it's that general category of what else can be done on the Bitcoin chain that attracted me like so many years ago. And people were doing these things in all sorts of different ways. But because Ordinals has crossed a certain threshold level, I think now it becomes sort of called the standard. Right? And I do think it has staying power because it's right now it's acting as like this almost like a black hole. Right? Like NFTs that were issued on Ethereum or other places, they're sort of like coming and getting reissued as inscriptions on Bitcoin, and people are finding that very valuable. Same with our direct experience. So a lot of, I think, builders in the Stacks L2 ecosystem were building wallets. They very quickly integrate Ordinals. Or people who are building Explorers, they launched like Ordinals Explorer. And one nice thing I'm noticing about it's actually opening up this work around tighter integration between L1 and L2, which I love. Right? So, well, okay, if your asset is issued on L1, how would you move it into an L2 in the future? Because the writing is also on the wall that we know that Bitcoin has a certain capacity and it's certain limitation around how much data will be on chain. It is not something where you can bloat the chain too much. So the writing is on the wall that when the millions of users start doing this, like you can have to tools and maybe some sort of, and then the block space price wars will determine what is valuable enough to live on. It's a luxury NFT or something that really has to be in L1. It will be there. But other things can move to L2, or people might, just pick in their assets, trade them, and then L1 is kind of like a cold storage, right? Like, be really safe and secure. We don't want to trust even in L2. You bring your assets back to L1.
Meet Stater Labs, a non-custodial multi-chain liquid staking platform. With over 40,000 users across 6 chains, Stater is just about to launch ETHX, a decentralized liquid staking token on Ethereum. Backed by some of the biggest names in crypto, their multiple audits with top security firms, bug bounties, and real-time monitoring are a testimony to their emphasis on security and safety. With a unique multi-pool architecture and tokenomics, ETHX empowers stakers everywhere to run a node with as little as 4 ETH and earn 35% more than solo stakers. Sign up for their ETHX Alpha today and be the first to know about $1 million in staker rewards. Ethereum is fully decentralized, and Liquity is a shining example of decentralization. Liquity is a non-upgradable protocol where users can deposit their ETH and take out a loan interest-free. Users get their loans in LUSD, an unstoppable Ethereum native stablecoin that is solely backed by Ether. You can use Liquity to buy real-world assets or to earn yield across 20-plus places in DeFi. More risk-tolerant users can also use the protocol to lever up on their ETH. With over 750 million worth of ETH locked into Liquity's unstoppable contracts, get access to real DeFi. DeFi that's immutable, capital efficient, and fully decentralized. Learn more at liquity.org. Okay, so this is really the second half of the podcast then, because what we wanted to do here, and I think we've accomplished it, is setting some context up for why Stacks has such an enormous opportunity here to unlock all this value on Bitcoin, potentially then being used in more decentralized applications. And so we're going to zero in here now on Stacks if folks are zooming ahead in the podcast in the future here. And so the simple explanation for Stacks has been that it is a Bitcoin layer for smart contracts to build decentralized applications. And I want to first just talk about why is Stacks sometimes called an L2 for Bitcoin? And I know other times you get shouted at for this. You get shouted at by a lot of different tribal groups. So we wanted to let you kind of like just break it down or dumb it down for us as to like why you might call it an L2 or why you might not call it an L2.
Yeah. So I think basically, historically, I think the term L2 was actually introduced in the Bitcoin circle. So if you look at, the work by Blockstream, so Blockstream started around 2013 or so, they were the sidechains paper, the liquid network, that is federation. I think people are very comfortable calling liquid an L2. Maybe even today, like Blockstream calls it like a Bitcoin L2. And I think the idea was generally speaking, if you're moving your Bitcoin from the main chain to something else, that's an L2. Like that's how people were sort of like looking at it. I think that's like the most broad definition. And then in Ethereum, when people started proposing different solutions, I do think people need to differentiate those solutions from each other. So the community sort of like converged to this definition that a quote unquote true L2 is something where your assets that are in the L2, the security of those assets actually depends only on the L1, meaning that I can only use the L1 security to withdraw my assets, right? So very strictly speaking, the roll-ups and things like Arbitrum, which are these fraud-proof type systems where you can give a fraud proof to the L1, basically say that, no, this is my asset, give it back to me, right? Those are kind of like these quote-unquote true L2s. And if you don't have this property where you can withdraw an asset using just the L1 security, then you're a side chain or something else. So that's the definition of the Ethereum community sort of converged on, and some of the other even newer ecosystems. I think they follow that terminology. I do think that there is one other aspect, or if something is an L2, which is if the main security of blockchains is reorg resistance, right? Like how much security is needed to kind of like reorg the chain and reverse transactions. So according to that property, if let's say a system like Stacks is settling all of the transactions on Bitcoin and it's following Bitcoin finality, meaning that to reorg the transactions on Stacks, you have to reorg Bitcoin. I think that at least checks one out of the two boxes, because Bitcoin doesn't have the opcodes where you can give up tools to Bitcoin L1 and say, hey, move this asset from the L2 to the L1. You can't do that in Bitcoin right now because Bitcoin doesn't have those opcodes. But you can have the other property, which is reorg resistance, that to reorg something on Stacks, you have to go and reorg Bitcoin. So in a more strict definition, do you think you check one box and not the other? But the box that you're not checking, again, I think it's not that it can never be checked. It's a question of when can Bitcoin have those opcodes. Or once Bitcoin can have those opcodes, I think at that point, there's literally no difference between Ethereum L2 and a Bitcoin, because you can build a full up on Bitcoin where there are opcodes, let's say op star clarifier or op star verify, which all along gets in there, and then effectively at that point there's no difference, right? Like the ETH L2, Bitcoin L2, they're kind of the same thing. So that's the more technical description. And then I think the challenge that I run into is I would respect the technical differences, and I've written docs explaining how Stacks through this definition is not a strict L2. And then I'll go out and talk to people, and normal people, most people will call it an L2, because just visually, and it's such a simpler thing for people to grasp that L1 is L1 and you're L2 because you're on top. And, especially a lot of the focus is also on moving capital between L1 and L2. CDC work is going on in the ecosystem, and I'm involved, but I think it's just such a simpler term. It's visual. Most people are going to call it anyway. The hardcore technical folks who may have a problem with it, they're actually a very small minority. So that's why you see that organically this term just keeps coming back up. And at some point, even I would give up and be like, sure, yeah, we're going to call it an L2. Makes sense, call it an L2. And the folks who have strong opinions about the technical details, I think you can just educate them and point them to a doc that, look, even through a strict definition, it can check one out of the two boxes. But again, it's not that it's never going to check the second box. That's just Bitcoin changes slowly. And once Bitcoin gets the opcodes, then it can be as true of an L2 as you want it to be.
You started to sort of highlight some of the advantages and drawbacks to stacks. Can we just do that once more, just kind of dumb down? If I'm a new user, I'm a DeFi user who's already on like Ethereum and an Ethereum L2, and I'm starting to scope out stacks. Can you call out just even the most obvious advantages? Like obviously it's cheaper to transact than it would be on the Bitcoin network, but then maybe some of the things to be aware of, like we wouldn't claim stacks as secure as the Bitcoin network, but there is something there inherited. There's advantages here inherited using stacks.
I think I would say, so the stacks network went like early 2021. It is a very decentralized ecosystem. And I think and one of the big reasons for it is there's a project that a SEC qualified offering in the beginning. And the flip side of the offering is that when the network is going live, you actually have to decentralize. Right? Like you can't be in the state where, one company has too much control over the network. So the early project members went through a lot of kind of like care and painfully deliberate in making sure that the network is very, very decentralized. And it has side effects, right? Like maybe development of the network happens in an open source way and decentralized way. Maybe it's slow. Like the process of like shipping upgrades and so on is very decentralized and happens slowly. But with that said, I think there is a current version of stacks that is live. And then there is a major upgrade coming, which is called the Nakamoto. So I think one of the first things that people would notice is your expectation would be from a Bitcoin layer or an L2 that you can easily move your BTC in it. And I think that functionality is not live. I think that by far is one of the biggest bottlenecks in the growth of the ecosystem as well, because the entire purpose is that there's $500 billion of capital just sitting there. And you should be able to move that and make it productive, use it in decentralized exchanges, liquidity tools, trade it with stable coins, with whatever you want to do. So I think that work is SPDC. And then, basically, if you assume that Bitcoin was not going to change in the coming years, then you're not going to get these opcodes. So the opcodes are the thing that are going to enable fully trustless way of moving capital between an L1 and L2. Right? Where you only trust the L1 and the opcodes that can verify that BTC is moving back from L2 to L1. Going from L1 to L2 is easy. That you can do, bringing it back to the hard part, where you need these opcodes to verify that this is a valid transaction. So the next theoretical best thing you can deal with is that there's a decentralized group of signers who are signing that, yes, it's a valid transaction where BTC is going not to. And this decentralized group of signers in the stacks layer case are the people who have locked STX capital in consensus, and they're earning Bitcoin rewards. It's pretty much like these people have an incentive to earn BTC. They have capital on the line. They are financially incentivized and motivated to do the right thing, right? To just sign the transactions of moving BTC back from L2. So I think that's one thing. The second category would be that I do think that there is a base level of speed that people expect. Yeah, like Ethereum is just a couple of seconds. Solana and other systems are even faster. And I think when you come to Bitcoin, it is average block time is 10 minutes, but sometimes it can be an hour. Right? And the users who are now coming back to Bitcoin for Ordinals, I think their experience, and I think it can be painful. I would argue that even for NFTs, maybe it's fine because it's like, they're registering something and part of the fun that is kind of clunky and it's taking time. But to build the real DeFi, like a thriving DeFi ecosystem, I think it's just not acceptable. Right? Like, it's not just the speed that, hey, you have to wait 10 minutes. It's also the unpredictability that you don't know. Sometimes it's an hour, sometimes it's 5 minutes. So I think solving that problem was also very important, where the folks in the stacks, their ecosystem, they worked on a base where you can cryptographically prove that time is passing in between Bitcoin blocks. So if you can have a cryptographic proof of time is passing, then you can have blocks every few seconds. So if a Bitcoin block was 10 minutes, there are a bunch of blocks. The Bitcoin block was there were 2 minutes in between a block, there were less blocks. We call them fast blocks, right? So, and all of these, when a Bitcoin block comes, they settle on the Bitcoin chain and you benefit from Bitcoin. So I think these two things, Bitcoin capital being easy and then the UX being reliable and fast, is the true unlock to Bitcoin DeFi. Like, that's sort of like my belief. And I think a ton of work happening in the Stacks ecosystem, sort of like leading up to the Nakamoto release is basically a long goal.
Yeah, this Nakamoto release that the Stacks ecosystem has planned, I think it's kind of slated for like end of 2023. I think that's kind of the hopeful benchmark timing for this, but totally agree. And just to kind of like reiterate the importance of it, allows for transfer of Bitcoin from the L1 to the L2, and then essentially greatly speeds up the L2 performance time of Stacks to be more performant and more in line, I guess, what other DeFi users would be used to in other ecosystems, like you mentioned, Solana or other ETH-L2s. So yeah, to me, this just does seem like a massive unlock. I want to also take some time just to kind of walk through the current state of Stacks right now. Like, what are some of the popular protocols on Stacks by TVL, trade volume, attention, however you want to kind of quantify where are users congregating currently?
Yeah, so I think one of the things that's pretty popular in terms of a bunch of users using it is this smart contract called PLX. So what happens is people lock up STX and they're getting it BTC yield. It's coming straight from this consensus. And that's very interesting because people are actually getting BTC or Bitcoin. And that sort of like shows the tight integration between the L1 and the L2, that you're taking an action on L2 and BTC is showing up on your L1 wallet, right? And people love those rewards. I think there's something like $300 million locked in that today. And people are earning BTC rewards over the last, I don't want to get these figures wrong, but I believe over the last year or more, something like $100 million in BTC has gone. So people who are Bitcoin believers were basically just getting Bitcoin deposited in their wallets. Just having that experience, I've had friends who would just send me text messages and going like, "Oh my God, I can't believe this. Bitcoin just showed up." So that's a pretty exciting thing, and it gives people a sort of like a preview of like there can be true Bitcoin DeFi where you deploy your Bitcoin productive and can start doing these things in a decentralized way. In the last marketable market, we saw companies like BlockFi, they did take on. They did have a lot of capital and they were giving yields out to their users. And I think these were sort of like honest companies as well. They did end up going bankrupt because of market conditions and whatever, but I think the management was honest and they tried to do the right thing. So what that tells me is that people want such products. Bitcoiners want such products. But if we can do it in a decentralized, transparent manner, there's a smart contract and you're just locking up capital in a smart contract, and that's how lending is happening in a very transparent way, I think then you're not taking the risk of these centralized companies. Even if those centralized companies are being run by honest people, obviously forget about any frauds that are happening. Even if they're honest people, I think there can be mistakes, there can be other problems that a centralized entity can just blow up. But that's over in a smart contract world, you risk is different. I think as far as the code is well audited, well tested, and so on, I think it can actually be more secure. And that's one other thing about the Stacks ecosystem, that it actually doesn't use Solidity and the EVM. There is a different language called Clarity, which is a decidable language. Basically, think of that as a much safer language. So it's a more precise tool in the hands of the developer, where they know exactly what the contract can and cannot do even before deploying it. So, and we made a very sort of like a conscious decision to work on languages being in the ecosystem, because we think that a lot of the Bitcoiners are much more risk averse, and they do care about kind of like security and safety a lot more. And I think it's sort of like a bet, right? Like you're not using EVM compatible stuff. That means people have to build things from scratch, and they can just reuse stuff that has been built on Ethereum. But I think it is something where probably safety is more important than anything else.
Stacks Network has a fairly popular token, STX. As of this recording, it commands a fully diluted valuation of $886 million. What functions does the Stacks token play within the Stacks ecosystem?
So I think it's used for gas payments, and then I think the big function it's here is, well, like when I was saying people are locking capital in a consensus, they're sort of signaling what the correct version of the chain is that everyone should be. But in the future, like with the Nakamoto upgrade, I think Stacks actually becomes that financial collateral for keeping these signers honest. So if you, it's a little bit of a interesting point, but there are these Bitcoin projects, what I would call them L2s as well, even if they're federated, like Liquid. On Liquid, you're sort of like trusting the Liquid signers, right? Like they don't have any financial stake. You're sort of like blindly trusting the signers that I'm moving my BTC to Liquid. I trust these signers. And sometimes because of the asset, people in Bitcoin will be like, hey, why do you have a different token? Well, the different token also allows you to build an open network, not a federation. It's open network. Anyone can become a miner, and anyone can become a signer. And these people have a financial stake that if they do something malicious, like they lose capital, so they're incentivized to do that right.
Muneeb, Binance and Coinbase have been in the news very recently for tokens that have been labeled securities on their platforms. Do you feel like somewhat vindicated for the longer path you took with the regulated token offering with Stacks? I believe it was Blockstack maybe back in those days, but maybe just kind of walk us through your mindset at that time and kind of like what you're thinking now based on what's come about.
Yeah, I think I don't know about vindicated, but I do think that the people behind the Stacks project always wanted to do the right thing in terms of compliance, and their legal risk tolerance was very different, right? So they didn't want to take a lot of risk. So we just generally tried doing everything we could to be compliant. And I think getting the SEC qualification, at least for the offering, was great, because no one can come and later say that, hey, you sold unregistered securities, because at least the offering itself was fully qualified. And I think until the mainnet launch, anything that the original company was doing was basically, filing with the SEC and full disclosures. And I think those disclosures have even continued even after the mainnet. So I do think that helps in the sense that if there's any value in being more transparent, in having these disclosures and sort of like complying with those legal standards, I think it sort of like helps everybody, right? Like, and it did force the project to be truly much more decentralized, right? That's an additional force that your entire legal structure is that after the mainnet launch, the ecosystem is going to be so decentralized that these things can trade and so on. But then you actually need to keep more decentralized. You can't just pretend, and you can't take that lightly. I do think it forced everyone to actually take a much deeper look in decentralization. I do think it comes with challenges and overhead as well, right? Like single companies can operate much more efficiently. There's less confusion, less ambiguity. Like in the Stacks ecosystem, if you go and see if there's some upgrade, independent parties will fix different versions of like, hey, let's upgrade it this way, let's fix this problem this way. I think all of those things are long-term healthy, but short-term challenge, because a much more centralized ecosystem can actually move faster, with less ambiguity, with clear leadership, and a decentralized ecosystem, all of those things are diffused, and you don't want to end up in a situation where there's the value of the commons, right? That there's open source code that no one really needs to maintain or do something about because it's so diffuse and decentralized that nobody cares, right? So I think that's a challenge, but I am a strong believer that long term, if you're not decentralized, then why are you operating in this industry?
Muneeb, this is probably a great place for us to wrap. But before we do, I want to remind listeners to follow you on Twitter at Muneeb. You have like the simplest, easiest Twitter handle. We've got Stacks with the second easiest handle. It's just Stacks, Stacks. They can learn more about Stacks at stacks.co. And then I wanted to just ask you a final question, kind of a call to action for DeFi users new to Stacks. In terms of a starter guide for DeFi users, what are some popular wallets they might try to start using Stacks? And then can you remind us, do you currently have to transfer value from a centralized exchange, or is there any other like native bridge that you recommend before the Nakamoto upgrade takes place?
So I think in terms of wallets, I would say the two, one is called the Hero wallet, HRO, and then Xforce. And these are both like Ordinals as well, right? So if you want to play around with Ordinals, if you want to play around with kind of like apps on the Stacks out too, use that. In terms of applications, I think Alex is one. So it's a DEX that's live on Stacks right now. Again, they've integrated BRC20 stuff to play around. Or people can go to Gamma.io. It's an NFT marketplace, both for L2 NFTs, but also for Ordinals as well, like the L1 NFTs. And people can play around with these things. And I do think there are ways in which you can do a decentralized swap into the Stacks L2 as well, although it might be a little bit more clunky. Like there's something called the Magic Bridge that people can look up.
Well, hey, congrats on all of your success. It's really a privilege and pleasure for us to get to talk with you. Again, we know you're very busy, so we're, again, honored to get to actually talk through all this with you.
Well, awesome. Thanks so much. This was a real fun chat.
Thanks everyone for tuning in. If you're a talented founder or developer, please consider reaching out to our team at fourthrevolution.capital. And for future episodes of the Edge podcast, please check out our link tree at edge_pod.